Alright, so I wanted to do a quick tutorial so you guys understand how to use each of these documents. This one here is the income tracker doc. There's also a spreadsheet to go along with it. As you see in the example here, you have your source, your date, and your amount. It's real simple. You just go down here into the template, enter what it is for your income, put the date next to it and the amount. Just keep track of it. You want to do this at least once a month. Now, some people will do it every couple weeks. Some people do it quarterly. It's entirely up to you on what schedule you choose to use. But it's simple. You just go in, add in your income source name. We'll say, for instance, Amazon. And then we'll tab over to the center for the date, and we'll just put in a date here just to be able to get through this, and then we'll say the amount 500 like in the example above, and then you keep doing this process until you finish the year. This way you have all your income tracked on one sheet here. This way it makes it a lot easier for you to be able to go through, cross-check things, and be able to make sure you didn't miss anything. And then we'll say hypothetically, we'll add in another one here. We'll put the YouTube partner program, the same date, just for the example. And then we'll add in one for a client. I'm going to use the same date again, just because I want to be able to show you real quick the basics of this stuff. Okay, so now we've got 3 incomes on here. We're just going to say that this is everything for the year, right? So when you're done, end of the year, you got everything on there, you're done cross-checked everything, and make sure you got everything on the list. When you're done, go down and put your total income received, $1,000. Right there, that's simple. And then you take this same information and you put it into your spreadsheet. Alright. Now, when it comes to the spreadsheet, like I said, it's the same process. Basically, you add in the name, the amount, the date, and this time you want to put a note so you know exactly what it was for example. So, using the same example, we're going to do Amazon as the income source. The amount is $500. Our fictitious date here. And then we'll say this is for the influencer program. And then we'll do the same thing again for YPP. Say 100. Our date. Partner. AdSense. And then do the client for 400. our fictitious date again. I'll just say Steph F. And that gives us our income source, right? And then come down here, your subtotal. Subtotal comes to 1,000. And then if you're doing the same method that I am, you're being on the safe side and you're doing the profit first method of your accounting, which is going by percentages of how you're going to do your monthly allocations. So just for this example, we're going to leave the tax savings blank for the moment, the owner's distribution, and the profit, because those are all numbers that you're going to want at the end of the year to go along with this. That way everything matches up between all of the different documents. That's why I have it in your steps to double check and triple check all of your documents that I'm providing for templates. Your income doc, your expense doc, your spreadsheets for both of them, your allocation sheet, everything. You want to double and triple check everything. This way you can go through your receipts, your bank statements, credit card statements, anything like that. Make sure that it's on the list. That way, come tax time at the end of the year, you're not missing anything. All your accounting is in order, which will make things go much quicker for you come tax time, having your taxes filed and being able to have your records to show if you by chance get audited. And by doing it this way, having these redundancies and double check and triple check methods put in place like this, you limit your risk of having issues in the future. Alright, now here's your expense doc. Same process as before. Just like with your income tracker, you want to put in the expense name, such as the company, contractor, whatever it is. That way you can keep track of everything, have your redundant records to make sure you don't miss anything, and be prepared for tax time. So like before, we'll do Amazon, tab over, put in the date, 12324. We'll tab over again, we'll say the amount's 500 again. And then we'll say Xfinity or Comcast. Alright, so now you see we've got all our expenses there. Same thing like before with the other document, end of the year, go down to the bottom, add them all up, put your expense total. And there you go. Now you've got your expense total for the year, and you can cross-check between your statements for your credit card, bank statement, whatever. Make sure you have everything between all of your documents, just like before. Just like with the income spreadsheet, same process. Enter the name, the amount, the date, and notes. When you do your notes, it does help to be as specific as possible. So for an example here, we're going to do the same ones that we've been doing, but this time I'm going to show you how to do like the Amazon one. for example, we'll say is an expense of $500. Now, that $500 could be one item, it could be 2 items, it could be 5, it could be 20, for all we know, right? So when it comes to your notes, when it comes to purchases, you want to try and include as much information as possible. So as long as you have your receipts, you can be a little vague on it. For instance, you only have so much room on the paper. So when you do your notes, you could be like, we'll say camera lens and clean or cleaner. This way you know it's a camera lens and a cleaning kit. This will be able to be easier for your accountant to be able to take care of things. Now, you could go further to the extent of making it abbreviations of cam lens, CLNR for cleaner, and we could say like you have a mount and tripod. Now you've got nothing but shorthand and abbreviations. Your accountant or your tax preparer will be able to go, okay, it says camera lens, CLNR, MNTTP. What is this? You'll be able to go, oh, well, that was the Amazon purchase for the camera lens, the cleaning kit, the camera mount, and a tripod. Boom. Now your accountant know what it is, and they'll be able to put that into the document for filing your taxes, and it's in the proper category. Now we could say, for another example, we'll do another one for Amazon, for instance, and we'll say this one's 105. It's the same date. And this one is a combination of, we'll say, USB, ADP, which is adapters, and then we'll say it's microphone, and suit. Now granted, that's cheap for a suit, but you know, Amazon's got them nice deals periodically. But now you've got a couple different categories here. You've got the USB adapters, which could be a computer accessory. You've got the mic, which is going to fall underneath electronics or musical equipment, and then you have a suit, which is clothing. So now this part of the accounting breaks into 3 different categories. So it's good that you have it acknowledged within your notes to show that it is these different types of categories, because they'll be able to go, okay, well, they don't need the receipt, but if the IRS wants to do an audit, then you'll have that receipt to show how it breaks down to the categories, because they're going to just put it into like a general expense unless they can actually decipher what the category is that it needs to go into. Hope that makes sense. But it's still the same process as before, but the more records you can have, the better. This way you have your redundancy to make sure you don't miss anything, as well as are prepared for tax time and a potential audit. At the end of the year, again, you want to go through, get your totals of all your expenses, put it into the subtotal. Now we'll say for this one, it's only $605. Okay, so $605, and we know our income earnings from the other sheet was $1,000, and after expenses, that would put a remainder of $395. And then that covers your expenses versus your income to give you what is left over. And then if you're doing the profit first method like me with your percentages for your allocations, then you would have your amount that you've saved at the end of the year for your tax savings, the amount you've paid yourself for your owner's distribution, and then the percentage that you saved for your profit throughout the entire year. Now, of course, when you do your profit, you can just save it until the end of the year, or you can do quarterly distributions or whatever setup you want to do. It's entirely up to you on the accounting style you prefer. This is just the method that I'm using with the profit first method to be able to track income, expenses, and be able to have things organized for tax time at the end of the year. All right, now this one here is the monthly allocations template. This is how I go through to do my monthly planning. I typically receive my deposits at the end of the month, so I am literally doing them like a day or two before the first, and sometimes it's up to a week later, depending on the company I'm dealing with. So I do all my accounting at the month beginning and don't have to touch it until the end at the beginning of the month again, usually. And I have mine set up in a system to where I know what's going to be done annually, what's going to be done monthly, and then I can also add in any extra expenses that I might have done during the month, such as taking a trip on short notice from, we'll say, like Grand Rapids to, we'll say, Chicago, and that costs an extra $300 for a rental car or whatever to get there. That will be an additional expense that wasn't planned that would get added in at the bottom of the worksheet for noting what I had for expenses that month and how the money was transferred from the income to the various different accounts, such as the tax savings, the profit, and distribution for expenses, and so on. But as you can see here, we get this set up just a little bit so you can have an idea of what this would look like, how I have it set up. Now, of course, I've only got zeros here, and there is a note to click on to the header up here in the top and change out the month here in parentheses. This way you can actually know what month it is that you're working on and keep everything in order. And then just copy the document, paste it, go into that copy, and then make your adjustments for the following month. That way it's simple. Or you can just save the original and then copy and paste. That way you have the original unmodified. It's entirely up to you. But we'll go down here real quick. We'll just say this is $100 instead of $0, because I wanted you guys to have at least an idea of what this could look like. This way, if you have one deposit a month or multiple deposits in a month, we'll say, for instance, like I said, I can get one at the end of the month just before the 1st, and I could have one a week later. So I still put them on the same allocation sheet because what's the difference of a day? Not much. Till the end of the year, in which case New Year's Eve is the final day cut off. Everything after that goes to the following year. But still. Alright, so now we'll say we've got $100 income on the first deposit. We got a $10 income on the second deposit. This gives us a total of $110. And then we'll say for giggles that we got an additional deposit for, we'll just say $750. So we're going to bump this up to $860. Okay, just so we have some higher numbers to work with a little bit here. We'll say the expenses for everything came to $605 like we did on the other worksheet. And then we'll say that you want to be on the safe side like I was when I first started out, and do anywhere between 25 and 35%. You don't have to. I highly recommend that you actually talk to a tax professional to figure out what you should do for your recommended personal withholding, just to be on the safe side. Because depending on where you are in the stage of your business, whether it's not formed yet, just getting formed, or starting to grow after launch. But for now, we'll just say that we only took, like, we'll say 5%. Just because you're not getting a whole lot of income, so you're not too worried about saving all kinds. So we'll just say at 5% is $43. And then we'll say again that you did 5% for profit. And then we'll say you did 15% for your owner's distribution, which would come to $129. And you come down here into the notes and we'll say Amazon purchase camera gear and suit. Quick and simple. And then you can be even more specific and put like the USB adapters, cam lens, cleaner, mount, tripod, suit. You know, it's entirely up to you on exactly how detailed you are on your allocation sheet. But then you can turn around, take those numbers, and then you can figure out, okay, well, I only had this amount come in. We took 5% for tax savings. We took 5% for the profit savings. We took 15% for the owner's distribution. And now we've got the remainder left for expenses, which gives you 75% to be able to take care of that cost. And we'll say 75% just to see what that is, and that's $645, which gives you an additional $40 remaining. So we'll put 75%, and then we can go down here to the notes again, and you can put that in the bottom of the note. Expense overpaid by $40 remains in OpEx account. This way you're already $40 ahead for the next month on your operating expenses. This way you're getting your owner's distribution, your profit, your tax savings, and your OpEx all taken care of. Everything's tracked, and it's clearly shown exactly how you calculate things, how you push the money to the different aspects of your expenses, ensuring you're covering your tax obligations if you have any, and being able to cover your expenses as well for being an owner. This way you're not just constantly putting into it, you're getting something back out of it. Alright, now as you see here in this template, I've already got it set up for your revenue cash flow spreadsheet. And this is where you're going to be able to really see the difference between what you're getting, what you're spending, and exactly what your numbers are for the end of the year. So as you can see here, we've got an example income of $109 for YouTube AdSense. We've got another example income from a client for $500. We've got another example for income for an affiliate for $391 from Amazon. And then you come down here and you've got your subtotal, which is 1,000. And then you've got your expense list. You've got the same thing like before, just like on the other worksheets. You've got your name, where it's coming from, your amount, your date, and then the example from the notes. And then again, you've got your subtotal afterwards. Then you've got the difference for your total income, and then what the difference is between those for your final remaining amount. Then you have your tax savings, your owner's distribution, and your profit. And again, just off to the side of those is your percentages to figure out exactly where everything breaks down for the year. This way you can take these numbers, granted it's basically two sheets smashed into one, but you can do a little bit more work with this kind of a spreadsheet setup to where you can actually come up with all the percentages between everything if you wanted to figure out where you may be hemorrhaging money that you could be saving. We'll say for an example, we'll just come up here and we'll look at these expenses. You've got the Xfinity and the mailbox service and the package and shipping and supplies, right? So we'll say, okay, Xfinity is charging you $235.39 a month for your business bundle for your internet and phone service for your business. But you can go to Spectrum, get the same service for, we'll say, $50 cheaper. Would you rather stick with Xfinity, have that bundle at $235.39, or would you rather go to Spectrum, who's offering the exact same service for $40 cheaper? I think I would go for the one that would be cheaper, because on top of that $40 discount for that plan, maybe because you're a new customer, they'll have an extra intro bonus or something that you could get on as well to make it even cheaper at the beginning or throughout your first year or some period of time. And I use this example because Spectrum is a subsidiary. They use the same equipment and everything from Xfinity. It's just the way that regulations and systems are, you know. But it's the same concept for pretty much anything. There are multiple competitors for just about everything out there, so you can see where you're spending a ton of money at and say, okay, well, can I get this service or thing from somebody else just a little bit cheaper? Does it have what I need at that price? We'll say for an example, just for hypotheticals, we'll go with two different YouTube memberships. We'll say that you're subscribed to one channel that's $20 a month, and all you're getting access to is a monthly Zoom call, an email newsletter, and a Facebook group, and members only content. But you have another channel that gives you the exact same kind of information and benefits, with the exception that they don't have the monthly meeting. Theirs is more of a submit a question and they answer it in a video on YouTube. We'll just put it that way. Just to have that similarity but yet different. Now, would you rather pay the lower cost at, we'll say, $10 and have like an Ask Me Anything rather than having an actual in-person Zoom meeting with all the other members where you still take the chance of getting your question answered? Is it more beneficial to be paying the higher amount just to have that in-person experience on Zoom? Or is it more beneficial to have the lower tier membership with the other person and be able to submit a question on a form and have a video made specifically to answer your question? I think it would be the cheaper option, because if you can submit the question and get a specific video answering that question, it's just as valuable, if not more valuable, than to have the in-person Zoom ability to ask that question. Because even if you're submitting them by forum or in the Zoom meeting, you could still potentially have a follow-up question, in which case, could you potentially get that answered immediately in the Zoom? Maybe, depending on who it is. But some people, in my experience, will tell you, you ask that question, it's the next person's turn, and you can wait until your turn comes up again. You're waiting your time in the queue. And in which case, if you're on a strict time limit, we'll say for an hour, and they're not going to go over that hour, well, now your question stays in the hopper until next time, if it saves them. Otherwise, you'll have to ask it again later or something. So in my stance, I would go for the cheaper one, but that's just me. But these templates give you a way to have a redundant tracking, not only for your records, but to be able to have everything ready for tax time for your tax prepper and in the event of an audit. This way you have redundancy when it comes to your records to show that you have everything from your statements and credit cards on there. Then it also shows that you have the redundancy of your bank statements, credit card statements, whatever, to actually coincide with your documentation that you've been creating for your own business records. Now, a quick look at the categorized expense sheet. Now, you don't have to do this, but it is recommended. It makes it a little bit easier on your tax preparer. What you would want to do, for example, would be to have everything in one organized setup. So we'll say anything that's like Amazon, you would have grouped together. So we'll say like this one here, for an example, we'll just say 100, 200, 400, just to have some data in here. Let's say 1, 23, 24, 2, 22, 24, and 420, 24. Okay, and then these are all different Amazon purchases, and we'll say the first one is clothing, camera gear, we'll do studio lighting and tripod stand, just to have something there for a minute. But then, like, after that, you would leave a space open, and then you'd have, like, we'll say Boost Mobile for your cell phone. And then again, you'd have them all together. That way everything is grouped. And then we could be like, leave a space, and then we could have like, we'll just put Comcast. But this way, everything is organized in their own little categories for the different business or contractor or person that you're dealing with for your different expenses. This makes it easier on your accountant or tax preparer at the end of the year to be able to look at each of them, to be able to put them in the proper section when they're doing your deductions and expense reporting for your business. This is how they're able to help you make it so you owe less to the IRS at the end of the year. So the better that you could keep track of all your income and expenses and have everything in line between all of the different documentation, you'll be able to give it to them come tax time and you'll be good to go. It'll make the process go a lot easier and it will save you some money. Because otherwise, if you have somebody else like an accountant or a tax preparer that does bookkeeping services or something like that doing all of this for you, you're going to spend an arm and a leg. And I know for a fact that's exactly how it is. That's exactly why I'm doing my system the way I'm doing my system in these templates. Because this is my first year ever filing. I wanted to be prepared. I talked to multiple people who are accounting and tax preparation professionals. And I got different answers between them. And then on top of that, the cost of them to just file your taxes was crazy. And then when they talked about doing bookkeeping and expense reports and things like that, that was an arm and a leg on top of filing your taxes. So by doing this yourself, you're saving yourself a ton of money. Yep, you could have QuickBooks and pay $300 and $400 a year to have it look at your bank account or scan your receipts and put it in there for it to do it. But there's still potential that it's not going to grab everything accurately the way you need it to for your accounting purposes when it comes to tax filing, like you would be here with these templates. And then I've also included this prep checklist here.